So, Palantir stock has just been on an epic run, and who knows where this freight train is actually going to stop. The good news is, if you follow this channel, we were buying under $9 for more than a year, which makes these gains even sweeter. But how did we know to buy Palantir back then when it was so cheap? Well, today we're going to discuss exactly how to identify and how I knew to buy Palantir when everybody, even the bulls, were saying, go, run away, bad stock, whatever the case was, doesn't matter. And you can apply what we're going to talk about today to any stock in the stock market. We're talking Palantir specifically, but you can absolutely apply this to any stock that you're looking to buy. How do you know when to buy at the great prices that you see and not get caught up in a bad trap? So let's talk about that right after you hit that like button if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. All right, so let's jump into it. There's actually 5 of these that told me I needed to buy Palantir way back when it was at $7, $6. I own a bunch of shares from back then too when it was at those prices. And honestly, despite a few run-ups, it was actually available for $7 midway through the year last year, just last year. And so it's not like you needed to be early to the party like we were. You could actually be late to the party. It was even easier to identify that opportunity again. But I'm going to take you back to the beginning. How did I know when to buy Palantir? And the 5 things we're going to discuss today are the things that kind of tipped me off and that I used to identify to confidently know that it was going to be a great stock. And the last one is actually the biggest and the most critical point. So make sure you don't jump out ahead of time. You got to get that last one there because it's perhaps the biggest giveaway that a stock is going to be an incredible stock in the future for you as an investor. So number 1, ignore the noise. I'll kind of approach this one like this in regards to ignoring the noise. In 2021, everything to the moon, and I actually was highly interested in Palantir based upon some things I had heard from some personal friends who had worked with the product within the Department of Defense. I was highly interested in it, but I did not fall for the noise of everything to the moon and everybody's DCF models and all these other goofy models and charts and graphs and everything else showing that Palantir at $40 way back then in 2021 was a spectacular deal. I ignored that noise. Just like when it fell all the way down to 7 and then 6 and it's the end of the world and Alex bangs the table, I didn't fall for all the noise and all the narratives out there that Palantir's never going anywhere. It's only a $5 stock. Alex banged the table, so therefore it's a terrible company and a terrible management team, and that means Alex is a terrible CEO, and all these other narratives that got thrown around. I completely ignored them all because that is why retail routinely buys high and sells low, because they do not ignore the noise. There's always a reason to not own a stock, to sell a stock, to buy a stock. Pretty charts this way, pretty charts that way, my valuation's this, all these other things like that. But in the end, you've got to ignore all of those things. They can't enter your calculus because all they're going to do is cloud your mind and get you thinking about things that you shouldn't be doing instead of focusing on the things that you should be looking at. So let's jump into the next thing that you should be looking at instead. So now we're going to ignore the noise. Let's jump into number 2, which is understanding the management team. Now, I agree. This one is hard to know up front. When a company first, DPOs in the case of Palantir or any other company out there, it's not like these are athletes per se, where you kind of know what they did in college. So you kind of have somewhat of a clue as to what their skill set is into the pros and such like that. You don't really have that. But what we did have in this particular case was before the stock took off to the moon, you had over 3 years to assess the management team. 3 years, guys. That is plenty of time to figure out, can this management team deliver or not? And some things that kind of clued me into the fact that this management team was delivering was the fact that they were hitting their own estimates. They were moving the business in the right direction based upon what they said. Now, whether they hit or miss what Wall Street wanted, I don't know, and I don't freaking care. I'm worried about, are they able to hit their metrics? Whenever you listen to the CEO talk, is he passionate about the product, not hype projections or anything else like that? I'm talking about the work that they're doing. Do they believe it's important? Do they believe there's more that can come from that? Do they believe that they have the best solution out there for their customers? Sure, there's some great salesmen out there, but there's a very big difference between a great salesman and somebody who truly believes it in their core. And if you're paying attention to Alex and this team, that comes through. That comes through earnings calls. That comes through interviews. All these other things of this nature are all a little bit of a tip here, a little bit of a tip there, to where all that work you put in assessing the management team, you got clues along the way that, hey, these guys really do know what they're doing. hey, wait a second, as I study these financials, this management team is running the financials differently than most executives run their financials, which is not making Wall Street happy, but it actually makes the balance sheet even stronger. It actually makes the company an even better company, and it gives them levers to pull in the future that other companies won't have because of how they're running the financials and how they're running the business itself. That all comes from continually putting in the work and assessing those management teams. And sometimes you've got to put your own bias aside and assess performance as well. Now, with Palantir, you didn't really have a long runway, but with Meta, there was no reason to doubt that Zuck couldn't turn that sucker around back when it was at 80 bucks. Yes, I understand he was just lighting money on fire in the metaverse, but it's not like he hadn't had issues in the past and managed to turn the company around, managed to completely overhaul how they make money, how they do everything, and point it in a new direction that's even more profitable than the old direction. He's done that repeatedly. So to doubt that he could then do it again, that's not really assessing the management team based upon what they can do and based upon how they can execute. So looking at that management team and continuing to assess them was another tip off that, hey, Palantir is going to do great in the future. But you got to have more than that. So let's jump on to number 3, and that is understanding timelines. All right, so what I mean by timelines is everybody wants everything now. Everybody thinks everything should be executed on now. Nobody wants to think or understand that doing things sometimes takes time, sometimes years to do. And let me give you an example here with Palantir specifically. They made the announcement that they were standing up a sales team from scratch. And all of a sudden, the very next quarter, they didn't see sales increase by any appreciable amount. Matter of fact, the sales team wasn't really off the ground. And people, big YouTubers who covered this company, love this company, were freaking out about it, saying this was a huge failure. Now, in my world, and obviously having some corporate experience and some other things of that nature, I thought, wait a second, this is a product that even super smart folks in my group are having a hard time understanding it, much less handing off that to a salesperson to then sell this to company executives. And oh, by the way, they've already told us their sales process is really, really slow to begin with. It's gotten better, obviously, over the past year. But at the time when the sales team was stood up, it was a really slow process to begin with. So I'm like, wait a second, you're standing up a sales team from scratch. Just getting people hired in to fill out the sales team probably took at least a quarter, if not further to go. Then you've got to build out all the sales tools, all the sales presentations, all the other things involved in that. Then you've got to bring in your sales team, get them trained up on something that's incredibly complex. And I'm sorry, your folks who have a high level of understanding of these, all the different things that Palantir can do are not going to be your best salesman. I'm sorry. They're just that's a rare person that can understand that's on a high level and be a great salesperson. That's just extremely, extremely rare. So it's going to take time to get those guys up to speed. And then you got to get them out there actually working through the sales process. Then you got to refine that sales process. That takes more than a year to do. So whenever this came up, I was like, hey, I don't expect anything for at least a year. I don't expect it to pay dividends for at least a year, maybe a year and a half or so before we start seeing that. And that's exactly what we saw, because I understood timelines in regards to the corporate world and how long these things actually take to come to fruition. Same exact thing with Tesla. Hey, Elon said it's going to be a rough year, year and a half. And then the very next quarter, whenever the numbers are going down, people are freaking out. Or, halfway through the year, why hasn't he turned it around yet? Well, he guided to the fact, and he kind of gave you the answer to the test. The test is, hey, it's going to take us more than a year to kind of get through this down trough in business and this tough time in business. And yet there's still folks who just don't seem to understand those timelines, even when they're laid out for them. They want everything early. That is a mistake as an investor, because it leaves you in a spot where you are not making accurate assessment on what's going on with the business. And you start thinking there's a fundamental problem, when the reality was there was no fundamental problem with Palantir's sales team. They were getting ready to rip and roar. You just didn't give them enough time to actually get themselves there. So a lot of folks sold at the bottom because the sales team wasn't doing anything, quote unquote, wasn't doing anything, when the reality was the timelines to stand that up weren't there in the first place, or weren't realistic in the first place for a lot of folks. And that ended up getting you burned because you thought they weren't performing. Now all of a sudden it's just, I don't know, it seems like every day there's a new contract of some sort, and it's moving in the positive direction the other way and gaining momentum, more importantly. And the sales process is also shrinking and getting quicker as well. So everything's moving in the right direction there, but that comes from understanding timelines. You have to be realistic with your timelines in regards to stocks and how management teams are executing to them. So when this stock got beaten down to $7 again because a lot of narratives around the sales team and a lot of other things like that, it was just an opportunity because I understood the timelines to go, ooh, wait a second, this is an opportunity here because this isn't going to be the case a year from now. And that's exactly how this played out. All right, 2 more to go here, of course, with the last one being the biggest one here, but this one is almost as important. I'll just call them both important. We'll just say that. You got to do them both. So let's jump into number 4. Number 4, which is my due diligence told me it was great. This is why I preach doing your own due diligence so much and doing a deep dive in regards to that and continuing to do your due diligence as you own the stock as you move forward. Because when you do that, you know what you own. It doesn't matter. The stock could still be at $7 today, and I would have been buying it like crazy the entire time because I understand what I own and I understand a big run is coming at some point in time. The longer it stays beaten down, the bigger the run's going to be, the tighter that rubber band gets stretched per se. And that comes from doing your due diligence in the first place, not listening to YouTube videos, not, getting an article or, buying a subscription to whatever that gives you a buy or sell rating on this and, following all these charts and graphs and all other things of that nature. That is not what told you it was a great stock to buy. It was your due diligence told you, hey, yes, the stock price is not reflecting what the fundamentals are reflecting, but your due diligence told you and you understood exactly what you own. So you weren't scared. You just saw it as opportunity. When it had its nice run after it turned profitable, it was like, finally, Palantir's running. Finally, I'm getting my money's worth out of Palantir. Finally, Wall Street's recognizing it. It didn't last very long before they beat it right back down to $7 again. And the folks that did not do due diligence, that means they did not know what they, owned. And a lot of folks sold out. A lot of folks got scared. A lot of folks questioned their investments. Whereas opposed to I had no questions in regards to my investment with the stock. It was a scream and buy signal for me to buy the stock once again because it was just Wall Street being dumb. But that knowledge, that confidence only comes from doing your own due diligence on the company and actually doing a deep dive and understanding it on a very, very high level. That's how you get that sort of confidence to avoid selling or questioning your investment or not buying nearly as much. Then you're left saying, oh, I wish I would have bought more, as it continues to run up. I know folks that didn't actually start a position when it was back at $7 last year because they were, oh, well, I'm going to wait for this. I'm going to wait for that. They're still waiting. It's sad too. They're still waiting and they had the opportunity to just buy. That came from them not having done enough due diligence to understand the opportunity in front of them. So you got to do your due diligence. And of course, this last one, which is earnings performance. Guys, you have to go deeper than the headline hits or misses or any other charts or graphs or anything else they put up in regards to around earnings. Get into what's going on specifically with the earnings, not just these earnings, past earnings as well. But earnings performance will tell you, are you getting a better deal or not on this company? Is management executing or not in regards to this company? Do not look at earnings reactions or, somebody's opinion on what these earnings were, anything else like that. Listen to the earnings calls themselves, pull up the numbers themselves and do your own work in regards to that. And I saw a company that was continuing to perform under the surface in regard to earnings. EPS was getting better. Free cash flow was improving every single quarter. When it went down, there was a reason for it going down. They talked about that in the earnings call. All the metrics and all the things I wanted to see were moving in the right direction in regards to earnings performance. Not the greatest earnings performance ever or anything else like that, but I was seeing the business fundamentally get better at almost every single earnings call. That's what you want to see as an investor. That is a tip off that you're getting, especially if it's beaten down, that you're getting a great stock that's improving fundamentally. Again, stock price does not enter into my equation in regards to how a company is performing. Earnings performance tells me how the company is performing. All the price tells me is Wall Street recognizing that performance or not? And that's where opportunity lies, is when Wall Street does not recognize that performance and instead wants to beat it down. That is the perfect time to continue to pile your money into the stock, but more importantly, confidently do it because you have actual earnings performance to back up your buys in regards to that. Because in the end, stocks always return back to fair value. The fundamentals, the stock price, when it's beaten down like that, will always catch up to the fundamentals. Now, does it get overvalued? Yeah, absolutely it does. We may be seeing that right now. But the good news is whenever you're buying in the right times and you have the right framework and you're using these 5 things in order to buy in the first place, you're not worried about what it's doing right now, whether or not it's overvalued or not, because you already own all the shares you want and more bonus shares than you want. And you're just waiting for an opportunity to buy more bonus shares in the future. That's the spot you want to be in as an investor, because then you basically set yourself up for constantly winning in the stock market instead of constantly chasing. And if you want help with doing due diligence, you want to understand companies more deeply, you want to be able to talk with investors about all that. For those of you guys that have made it this far in the video, I may have left something special down there at the pinned comment for you guys that made it this far, where we teach you exactly that through 5 courses, through free coaching, to direct access to me anytime you want to ask questions. You got the best 6, 7, and 8-figure Discord members out there helping you work through all the different theses, all the different materials that we teach. So make sure you check out the pinned comment, take advantage of what I left down there for you, and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.